All right, everybody, welcome. Doug McKay on the Friday the 13th of April, 2012, looking at a chart of the daily chart of the S&P 500 cash. Closed today basically at the lows at 1370.26. We are below our line in the sand, which last week, in order for the trend to change from long to short, was 1390. So again, today we closed just above 1370. We avoided most of the 2% move down this week in the S&P simply because last Wednesday, a week ago Wednesday, on the 4th, we hedged in the managed accounts on the diamonds. We hedged with the DOG. So maybe on a $100,000 account, up until yesterday, we were down maybe $100. So let's say a tenth of 1%, if that. Yesterday, even though the trend was down, we thought that on the S&P, we could maybe see a bounce up into resistance around 1400. So in the morning, probably about 7:30 Pacific time, we bought into the SPY when the S&P was up 9. It finished up 18, so that looked like a pretty decent move, thinking that maybe we'd pull back today and then eventually make that run up to 1400. That may still happen, but at the same time, also this morning, we wanted to have a stop in place on half of that position. I took off maybe 20 cents back from our entry yesterday, and then we had a stop today on the balance of 137.17. So we are back to cash. Our subscribers are in cash. They are in cash as of Tuesday. Actually, as of Tuesday. So that's where we're at. Again, we had losses today, but I think it was maybe a tenth of 1%. In any event, we never want losses, but we certainly didn't go with the 2% for the week that the buy and hold did. So where do we go from here? Well, we know the overall trend is down. Yesterday, we were again playing a counter trend trade, meaning that the trend was down, but we thought we'd get up in and around 1400. We were back above the 50-day moving average yesterday, and today we just basically wiped out any gains that were put in yesterday. When you look at this type of bottom here, I don't know, and I said this midweek, that I necessarily believe that this is going to hold. And the reason for that is the low that was put in on Tuesday was 1357.38. And the low that was put in on Wednesday was 1358.98. So there was never an intraday low on Wednesday that took out the lows of Tuesday. In other words, to take out any people that had hard stops parked there. We can see the same type of chart over on the SPY. So that's one of the reasons we exited today, even though we took a small loss, very small loss. But nonetheless, we took a loss. But I just want to see what shapes up next week. A big earnings week next week. Not only that, but we have the Spain auction as well towards the end of the week. So we'll see. Let's look at some scenarios here. This could possibly turn out to be an inverted head and shoulders, which is a bullish pattern. This could be a left shoulder. This could be the head forming. We could pop up next week, the week after, build out a right shoulder somewhere between 14 and 1420, and then eventually break out above 1420 to new highs. And if that happens, we are going to have to get on board, and we'll get on board with a larger percentage to wipe out the 10th or 0.2% loss that we had this week. At the same time, we could be looking at the opposite type of pattern. We could just run up to the underbelly of this trend line. If we were to extend this trend line, we could run up to the underbelly of the trend line and roll over again. This could be some type of head and shoulders here where we don't get any higher than 1400. So we'll have to see. It's not clear enough whether to go long here or whether to go short. And I think by these two opposing candles, the market feels the same way. So for now, we'll just see what happens, and we'll sit in cash. Let's take a look at the SPY chart. We can get a little more specific here. Again, this is these gaps were filled during the week we've been, for our subscribers, we've been talking about these gaps, the 4-minute trader people, that we felt at some point these would get filled to the downside. We just didn't know how high we would go first. We still have this gap left to go. Doesn't have to be filled on this run, but at some point the odds are we'll probably fill it. The odds are probably that we'll come back down to 1,300 sometime this year as well. I remember last week we were talking about touching 1,350 at some point in 2012, and the low that we put in right quick was 1,357 on Tuesday, so it definitely fell apart very quick. Was this rebound expected? Yes. It's just a matter of whether or not it has more oomph left in it, or if after basically 5 days of selling, 2 days of a rally, that's it, and we're heading lower to take out this area here. Let's look over to the SPY, make sure that matches what's going on with the S&P in terms of intraday lows. Yeah, it certainly does. This low was never taken out in the SPY. It doesn't have to be, but I would guess that it's a target. So we'll see again next week. What else? Let's see if the NASDAQ held the 50-day today. I know we're still trading above 3,000 on the NAS, 3,011. So 3,000 basically coincides with the 50-day moving average as well. But I would have this trend in correction at this point. Until we got above 3060, I would be out of the NAS. When we take a look at the Qs, let's see how these line up. Not a bad looking chart. We talked about support being at 66 and also at 64.50. So we'll see. Again, for right now, I'd be very, very cautious on what you buy. I'd want to be buying stocks or ETFs that are coming out of basis, tight basis going to new highs. One of the examples is a chart that we put out on 326, which was Visa. You can see in this tight range, decent volume yesterday and today, again breaking out. On this, you'd want to trail your stop 5%, very similar to what we mentioned back on 326. Let's take a look at gold. Another tough chart. I mean, it's been this way for weeks. You can see we've been in this tight trading range. And I would get long this and exit the short position that I have in my personal account if we got above maybe 165, 166 for sure. I'd have a tight stop on it. But this could go either way. This could continue to break down, or we could come up here and test this area of resistance at 166. I think if we get through that, people will take a shot at it, which will move it up. One of the things that's somewhat enticing here is that this low was taken out here. And I think that's one of the reasons we had this nice run this week in gold, but obviously no follow through in risk assets today. Let's take a look at treasuries. Actually, let's flip right over to transports. I haven't looked at these in a while. Not too bad. Below the 50-day moving average, I would not get long this till we got above 94.50, maybe a half a position, and then the other half would be above 96. Where would I play a bounce? Maybe at 88.50. But for right now, I would stay out of it until we got above 94.50. That would be a half of a position. When we look at TBT, we talked about a chart not being clear if we could not see a chart and make the trade out within about 3 to 4 seconds. We mentioned this last week just to walk away from it. But this has been a tough chart, so we have not done anything on the long or short side of treasuries at this time. This looked like it potentially could have more follow through in the next couple days to fill this gap here, but it got slammed today as we see TLT, which we said last week was probably in a C wave. Again, A, B down, C up. So we'll see how far this goes, but it's quite possible we could be going to new highs in treasuries, meaning lower yields. We're not too far off from a percentage basis off of these breakouts of around 120, 150. And that's TLT. The IEF looks even better on the shorter end. So here we are here, above the 50-day moving average. Maybe a little bit of caution because of these gaps. But other than that, clearly above 106 is a breakout. That'd be a reason to get long and forget the short side of treasuries, obviously. Oil kind of looks very similar to the way it did last week, still holding below a downward sloping trend line. If we were to extend this trend line from last week, it would look very similar to this. So again, this remains in a trading range. We probably have to see a close above 105, otherwise 100's in the cards. We're trading in that range on crude between 100 and 105. Above 105, maybe we take a shot at 110. Good resistance there. Below 100, the next level is around 95. Okay, guys, that's probably it. Again, 2% down this week on the S&P 500. We were somewhere around 0.1%, at the very most 0.2%. I don't like that, but things kind of came apart today. Again, who knows? Maybe you just buy and hold, and this is going to turn out to be another small 3, 4, 5% dip, and we build out an inverted head and shoulders and we go higher. We'll see. But in the meantime, why take that risk? If we come down through 1350, 1340, 1320, you never know. Maybe we could head to 1300. Okay, earnings next week. Some news on Spain towards the end of the week. We'll see you guys next week. Thanks.